especially when we're, at this part of the real estate cycle, you're going to be in a really great position after the next couple of years pass by and everything kind of shakes out a little bit. You may not do too hot for the first couple of years, but for after that, once inventory comes down and supply is low and demand is high, those who own control the gold. He who holds the gold makes the rules. So, the cash flow will start increasing. Hopefully interest rates are much lower at a point then where you could refinance out. But sellers don't have a lot of leverage right now. And so if you can steal some stuff from somebody who has to sell and figure out a way to make it work for the next couple of years, you're going to be in a very good position. Welcome back to another episode of the Real Entrepreneur Podcast. This is Alex Kaufman. And today we're going to be talking about Austin, Texas, and the market here. I think we're going to be talking about market in general, the economy, and we're going to be going through some headlines, and we're going to be seeing what is happening in Austin, what's going to happen in Austin, and what is the opportunity in Austin. You ready for the first headline?
Yes. So for those that don't know, Elon recently tweeted out that SpaceX and X headquarters are moving to Texas and assumingly Austin, just because he has his other headquarters here. So what are your thoughts on that?
I think it's great. We love Elon. Austin loves Elon. Elon loves Austin. I mean, Elon back in 2020, I believe it was. Late 2020 is when, let's look, when did Tesla announce Austin headquarters? They announced it, it was 2021. Elon announced he was moving Tesla headquarters to Austin. And as we know, that's done a lot for Austin. The moment that Elon did that, a lot of other people followed. And Texas is pro-business. Austin does a lot to be able to, support businesses. And I think it's great. Like I said, we love Elon. Elon loves Austin. Moving the SpaceX headquarters to, what's it called? Boca Chica? SpaceX, Texas. It's down south in Brownsville, or near Brownsville. But anyways, so that's good for the south of Texas. But X moving their headquarters to Austin is good. I was looking up the other day how many people are employed. I think I was looking that up this morning by X. And there are about 7,500 people that are employed by X. And this is up. This was as of May 2024. And this is up from about 2,000 people. So almost 50% increase in employees at X from 23 to 24. Now, to my knowledge, I don't know exactly, but to my knowledge, Elon requires that a lot of these people come into the office. So that means that a lot of these people will be moving to Austin, Texas, or Elon will be hiring new people to replace those who don't want to move. But I believe Elon wants people in the office. So I don't know where the X headquarters are going. Do you? Has that been announced? Mm-hmm. But be bringing at least, a few thousand jobs here to Austin. And it could be a big push for more tech to start moving to Austin. Apple's here. Facebook's here. Dell, their headquarters are in Round Rock, just north of Austin. So X moving their headquarters here could potentially bring other tech and social media companies to Austin, which would be great. Silicon Hills. I don't know much about the transgender law, but
so this is still news, or this was announced on July 16th, so 2 days ago. Logistics property breaks ground in Manor, and this is a Chicago company, and this would be their first Austin area development. And as
that's the one we drive by, all the time.
Mm-hmm.
Gorgeous property. I love this property. I think it has more than it says here, 408,000 square feet, but I think it's more than that. Is this the one that we drive by? On our way to the farm, I texted Rob.
I don't know. These photos look very similar, but these also kind of look like renderings.
Yeah. I texted this to Matt and Rob the other day. HPI Crossroads, if this is it.
Well, this says that the building will have power, lighting, and spec offices at the second quarter of 2025. So
Yeah.
I don't think
I think this is it.
McFarland? Is that what you said?
What'd you say?
What'd you say the road was? Titanium Street?
Where are you finding this?
12821 Titanium Street in Manor.
12821 Titanium Street. Well, that's, yeah. No, this isn't it. This is different.
Next to mine.
So, yeah. Scroll down so I can read it, please. Logistics Property launched its first development in the Austin area Tuesday. It's 2-building, 408,000 square foot industrial project, blah, blah, blah. The project includes 175,000 square foot rear load warehouse with 60 by 52 foot, blah, blah, blah. Buildings will have, yeah, of course. The general contractor, blah, blah, blah. Who is the company? What's it called? Logistics Property?
Mm-hmm. It says Chicago company.
Yeah, who's the company?
Logistics Property. So
Interesting.
Logistics is like a trucking company, I believe.
Yeah, Logistics Property Co. Cool. Yeah, it's great. It says they have 55.3 million plus total square feet of area developed throughout the U.S. since 1955. $3 billion worth of dev spend and 25 years experience. Blah, blah, blah. That's good. I like, that's smaller. So the one that I was talking about is it's Austin's largest planned industrial development. Over 1.6 million square feet of industrial space to claim. This is a gorgeous property. It looks just like this one. It's HPI Crossroads Logistics Center, and it's right off 130 and Palmer, and we drive by it every time we go to the farm, and these are gorgeous properties. Now, I think that this will, I don't know a ton about industrial here in Austin, and let's see if we can find, well, I did this CoStar search on, let's do it on industrial here in Austin. All right, so Austin, Texas, industrial. Let's look at a market report. I have multifamily pulled up for Austin, but I'm going to pull up the industrial as soon as it finishes. But gorgeous property. I really like the HPI Crossroads, and obviously the logistics company building that in Manor is good too. But the HPI Crossroads is so much bigger. Mm-hmm. It's like 3-4 times as big, and gorgeous property. They already have some tenants moving in there, but these are some assets that I would love to own. Is some of these industrial, really nice logistics centers. They're gorgeous. All right, what's next? In the last 12 months, there's been 12.5 million square foot delivered in Austin. The absorption in the last 12 months is about 7.5 million square feet. Vacancy rate's about 10% for industrial. And rent growth has, over the last 12 months, has grown about 2.6%, which is not bad. Better than the multifamily report, which is negative 5.3%. But most of it, the deliveries mostly have been logistics, obviously, just like this. And there's a ton of logistics under construction right now, as we just talked about. Vacancy change is up about 3.4%. Absorption is down. Deliveries are up about 203,000. And market asking rent growth. Well, I'm looking at different time periods. Shouldn't be doing that. Yeah, why is it showing me all that? Okay, let's see here though. So forecast vacancy, this is from CoStar. They're forecasting that vacancy is going to peak in about Q3 of 2025 and start declining around that time frame. And same, that's with the development as well. We're at, kind of an all-time high availability rate over the last 10 years. SpaceX Project Echo. Is SpaceX moving its headquarters to where?
It just said Texas.
Did Elon specify?
I mean, the tweet was very...
Bigger-
The tweet was very generic, but it just said, like, SpaceX and X are going to be moving to Texas.
The biggest absorption is SpaceX in Bastrop County. Then we have Cross Points. All right, market rents. So they're expecting rent growth over the next 3 quarters to decline a little bit and then hit a bottom and start increasing to about 6% through 2027 in rent growth for industrial. Market asking rent per square foot pretty much on an incline. It looks like it hit the bottom in Q1 of 24, and then under construction. So deliveries are pretty high, and then they're going to hit pretty much a bottom at the beginning of 2026 in January. The submarkets that have the most construction are East Austin. Round Rock's number 2 shows, and Round Rock's 81% pre-leased. It's great. Existing and then under construction about 317,000 square feet. Samsung, of course, it's supposed to complete in a month. Samsung is. It started in March of 2023. And Samsung's going to bring so many jobs. Tesla, the Bobcat project, looks like Dell's going to be finishing some construction next year. Maybe that's where Round Rock's.
Yeah, it's not too far from the north or the regular place.
Yeah. Sales. So right now, let's see here. Market sale price per square foot. Austin price. So Austin is about market sales price and then sales volume in millions. Yeah, so Austin's price per square foot is about, looks like $155 a foot. Market cap for industrial. For logistics is about a 7.3 cap rate. And then flex, specialized, Austin, everything else, it looks like it's about a 7.6. It's a market cap rate according to CoStar.
Is that good or bad?
It's good. I mean, multifamily in Austin is cap rates like 5%, so or less. We were talking to a broker yesterday. There's a 400 plus unit deal in Georgetown. I think that was trading at they're trying to trade it at about a 5.5 cap, about $180K a door. Nice. I think it was just built last year. But average cap rate, according to CoStar, in Austin, about 6.1%. Average vacancy at sales, about 15.1%. Average price per foot's about $174 a foot, based on 194 comps. Job growth. So Austin, job growth has been on a decline since 2021. It was at its peak. From 2020 to 2021, it was negative in 20, of course, because of the vid, but it rose about 12% in 2021, and right now it's kind of like flatlined, and it's about a 3% job growth year over year. United States, it's above the United States average.
Do you think that's because a lot of headquarters have moved out of Austin, and then also people being laid off, and then also people like quitting their jobs to pursue entrepreneurship, like their own business?
I don't know. I mean, people, I don't think that many people are successful at quitting their jobs and starting their own business. It's a very select few who actually, really are. So I guess I don't know the stat. This is from Oxford Economics, so I don't know how those stats are taken, but Austin is always above the U.S. average. So, prior to the vid, Austin was about 4% year-over-year job growth, pretty steady. And we're kind of returning to that metric. We're a little bit below. They're forecasting, it looks like about 2 to 3% job growth for the next 4 to 5 years. But we're also in the middle of a recession. So, it's another thing too, right? Debt is extremely high right now. Businesses aren't taking a ton of risks. So that also has to play into the job growth forecast. Unemployment rate in Austin is below the U.S. average. So Austin stays at about 3%, and the U.S. average, 4%, give or take. And then net employment change year over year. Yeah, I mean, Austin's always net positive. Median household income in 2019-20, prior to the vid, it was about $80K. Right now, in 24, it's pretty much $100,000 median household income, and it's just a projected straight line up. By 2028, they're expecting about 114,000, it looks like, in median household income. Population growth year over year. Austin, United States average is about 0.5%. Austin currently is at about 2% year over year population growth. So this is good. This is honestly better than I was expecting for the stats here in Austin. But Austin's such a small real estate market. Matt and I were talking about this yesterday. We were talking to some local big brokers here, and it's just hard to make a lot of these deals make sense. There's obviously a lot of stuff being delivered here in Austin. Like, those are all from the industrial stats. Here, for the multifamily stats, 12-month delivered units is basically 27,000 units. Absorption over the last 12 months, about 14,000. Vacancy rate for multifamily here in Austin, CoStar market, 13.9%. That's pretty high. And 12-month asking rent growth is negative 5.3%. So rents are down here in Austin. There's really nothing to look at here in Austin for deals. We don't really look at anything here right now.
So I know you just said rent prices are down. I just pulled up this article from Newsweek that they dropped as the city sees floods of new apartments of like all of the new construction, particularly the South, because that's where a lot of people are seeing. But it says Austin's year-over-year rent drop of 9.5%. in terms of the rent price decreases.
Yeah. So this is what I'm looking at is for multifamily apartments. I'm sure that this is taking into consideration single family and other things too. Quit scrolling. Go back up. But it's because of what you just said. I mean, there's so much inventory being delivered in Austin. 27,000 units basically over the last 12 months. And 14,000 absorbed. Vacancy rate 14% basically. And for multifamily, rents are down about 5.3%. But it's what your article just says, because there's a lot of inventory coming. Our rent didn't raise for 3 years. How long? 3 years? 4 years? No, it's longer than that.
We've been there 3 years, so it hasn't raised 2 years. The third year it raised.
No.
It's correct. We've lived there 3 years. The second year she didn't increase, and then the third year increased by 100.
No, we didn't get an increase for 2 years straight. So 3 years in a row is the same. We moved in 21, 22 it didn't increase, 23 it didn't increase, and then 24 I accepted the increase. So for 3 years straight it was the same. 21, 22, 23.
Agree to disagree.
Okay, well.
We haven't lived there that long.
Who's the one who's good at math? Think about it.
When we moved there.
All right, we moved in July of 21, right? Rent was what?
$2,300.
All right, so come June of 22, which was 2 years ago, she said she didn't want to raise the rents and asked if we wanted to stay, right? Stayed the same. Then the following year, June of 23, so that makes 3 years.
But only like 21 to 22 is 1 year. 22 to 23 is 2 years. 23 to 24 is 3.
That's right. And that's 3 years of no increases.
No, the third year there was.
24 to 25, there's an increase. 23 to 24.
I mean, technically it's 23 because July of 23.
All right, you're getting lost. We had 3 years of the same rent. But anyways, if and this is, just via negotiations, but like us, for example, we live in a nice house in a nice neighborhood. our rent 2,321, and this is about the following years when the market started to shift. So when our lease came up for renewal, market shifted. Interest rates are higher. Things are taking a turn in the economy, right? And so I just said, look, we're not paying a higher rent. We can move out. That's fine. But then the landlord has to come in and do a make ready on the property. That's going to be a few grand. We take nice, good care of the property, but you got to touch up the paint. You got to, clean. You got to do all these things. It's not like there's much damage, but it's just part of the cost of doing a make ready, getting it ready for the next tenant. Then you're also going to have leasing was slow. So you're also going to have 2 months, 3 months of vacancy, and that's going to kill you. It's going to eat up all your income. So by that point, you have 2 to 3 months. Let's just call it 2 months of vacancy. That's $4,600 plus the cost of the make ready. I probably could have negotiated a price decrease in my rent if I wanted to, because you have to weigh those costs out as a landlord. And also too, there's a lot of houses in Austin that, rents started going up quite a bit towards the end of that run that we had there in 2021. But if they're building all these brand new apartment units, and the apartment unit rents are less than, some crappy house that was built in 1970, brand new apartment, get me a 2-bedroom, and I can pay less rent there than I would for a house. And with the apartment, I have a pool, I have a gym, I have valet trash, I have all this stuff. It makes sense, and I'm a better location, better updated unit. And so it just makes sense as to why, the rents have gone down. And then you have so many apartments coming. Then all these apartments have to compete with each other. In order to keep occupancy up, they got to lower their rents. They got to ask for less, because you're competing with these brand new products that are being built. And these brand new products that are being built, they're offering rent concessions. You get 2 months free. You get this, that, the other. And so they're all competing with each other. But I was right. We had 3 years of the same rent. Absorption, let's keep going. Vacancy rate. It looks like vacancy. Wow, that's crazy. It said the vacancy rate in Q1 of 24 was like 16%. Good news is that the forecast is a pretty much straight decline over the next 4 years, as a lot of this inventory gets absorbed. Rent per square foot is down. The high, like I mentioned, was like, February, March of 2022, maybe April, May of 22. It was about $2 a foot. And now it's hovering around like $1.80 a foot for multifamily. Market rent per unit. Yeah, Austin is significantly lower than United States. Rent growth. United States market rent per unit is up like 22%. And let's see here. And it's about like, I don't know, give or take like $19,200 is about the market rent for the United States. And Austin, market rent per unit is, about $1,700. So it's below market rent per unit by bedroom. All right, what are your other...
So where do you see, like with all the data that you've been sharing with us, where do you see the next 6 months to a year for the future of Austin real estate, whether it is commercial, residential, or as a whole?
I don't see much changing in the next 6 months to a year. All these units, it'll probably take a 24, 30, 32 months for all these units to be absorbed. But after all these units are delivered and absorbed, new inventory kind of drops off a cliff. We were talking about this yesterday. So I don't see much changing for a couple of years. And then, after a couple of years, when all these units are delivered and absorbed, that is when things get tight for the market, and good for those who own. Right now, it's bad because supply is up and demand is down. But once that shifts and demand is up and supply is down, this can be good for those who own the supply. So Austin's unique. Austin's extremely small market, and there's not a ton of stuff to choose from. So, if you can find some stuff and make some stuff work right now over the next 24 months, especially when we're, at this part of the real estate cycle, you're going to be in a really great position after the next couple of years pass by and everything kind of shakes out a little bit. You may not do too hot for the first couple of years, but for after that, once inventory comes down and supply is low and demand is high, those who own control the gold. He who holds the gold makes the rules. So, the cash flow will start increasing. Hopefully interest rates are much lower at a point then where you could refinance out. But sellers don't have a lot of leverage right now. And so if you can steal some stuff from somebody who has to sell and figure out a way to make it work for the next couple of years, I think come year 3 through 5 or year 3 through 10, you're going to be in a very good position. But 6 to 12 months, not much is going to change. And then I was going to look at the residential side, but that's not same concept there too. But anyways, Austin is strong. We're not looking at a ton of stuff in Austin though. We're looking at DFW as markets that we're attacking here in Texas. I think it's my favorite one. So we're looking at stuff there. We have a 160 unit we're looking at. We have, I think it's over 200 units up north Texas, almost at the Oklahoma border that we're looking at. We're going to go check it out this weekend. But we're looking up north near DFW. DFW is just a monster market. Same concept there too, though. It's hard to make a lot of stuff make sense. But if you're interested in doing these types of deals with us, go to tr3capital.com. Yeah, just go there, tr3capital.com. You can sign up. We have our next investor call. When's this releasing? Tomorrow? We just had our next investor call, but our next one will be next month. But you can sign up there and you can watch the replay from the one we just did yesterday if you want to. And then we have our One Deal Away boot camp coming up August 13th. This is a virtual boot camp over 4 days where I'm going to walk you all the way through finding a deal, underwriting a deal, analyzing a deal, negotiating a deal, and sending an offer on a deal that could change your life. You're only one deal away from financial freedom and really changing the trajectory of your life. But you got to put the work in. You got to be committed. And it's not just going to happen by osmosis. So we'll see you next time.